Welcome in, welcome in, welcome in. Welcome to the show, our Everything Money fans from all over the world. We welcome you into the big show, our Tuesday, Thursday live streams. I'm sitting in a different position right now, Paul.
Wait a second, hang on a second.
What does it sound?
This thing's doing sound.
That thing's making sound, Don. How do we do
Oh, get off your
No, it's not that. Oh no, close your YouTube. It's your YouTube.
Hi guys, so we are here. We have two boards right now, one behind me, and your Uncle Paul's to my left now. We told you we're upgrading the studio, and here we are. So we'll give you a studio walkthrough for our patrons. There are cameras and lights everywhere, and of course, if Uncle Paul snaps his fingers, we spend 10 grand and do a new setup, so here we are. So Don, show Paul over here. Welcome in Paul Gabriel. It's Paul, right? And then Don, now show Mo over here. Welcome to Mo. How are you, Mo?
Great, how are you doing?
We're doing all great. So Mo is over here. Isn't he a card? Mo is over here. He's going to talk about the momentum trading and day trading when need be. And Paul's going to talk about all the things that Paul blabbers on about. But regardless, we welcome you in from all over the world. Paul and I just described an idea of maybe opening up at some point, guys. We'd love to get a little earlier so we can welcome our European people in and folks on the other side of the globe. So maybe an early live stream at some point might be helpful for you guys, I'm certain. But for now, here we are. It's been an incredible week. GameStop, the crazy short squeezes that are going on. It's completely absurd. But we're not looking at those today. We are looking at retail companies. We intend to look at companies like Kohl's, Costco, Dollar General, Dollar Tree, Target, and Walmart today. We will use our 8-pillar analysis to look at the financial health of these in comparison to their current stock price. And Paul will let us know if it's a buy or an avoid. I'd be interested.
That's not true.
Go on, Paul.
Remember, we don't take the 8 pillars as a buy or sell. We take the 8 pillars as a screening process to then look at what should we look at in more detail. Very rarely have I said, yes, you must buy this.
Of course, sorry about that. Yes.
Can't stop.
Won't stop.
Won't stop. GameStop.
What is it at right nowadays? It was like 96
By the way, I
bucks
have
this
to give
morning.
credit to Matt Jensen for this one. It was not Mo. I gave credit to Mo last time. Matt wrote me a very vile email in which he said he wished death upon me if I didn't give him credit for it. So I'm giving Matt the credit for it.
So Matt and I were texting after you said my name, and we were saying, okay, let's not say anything so that we can't, because we always give Matt a hard time for not joining the live stream, so he was actually on that time. So we said we were gonna try to give you a little bit of.
I have another announcement to make. Everybody knows that Mason in the chat is a personal friend of mine. I really hate to say friend, but Mason will be joining me and Mo in Mexico next weekend for the entire week, because Mason is quite the aficionado of merch. And Mo likes the merch, Mason likes the merch, so Mason's gonna be coming up with 50 ideas for me for merch that will come out in the future. So if you have any ideas, send them to Mason. He's in the chat. He's open to ideas, but he knows how to behave. He knows he needs to behave on the trip, or I will send his ass back home.
Mason had one rule, and it was behave in Mexico.
Let me get after again some interesting things that are going on now. We just hit 15,000 subscribers, which is absurd because we had less than 1,000 in September. So we appreciate you guys following us along on this journey. We also hit, Paul, how many patrons are there now?
We just crossed 700 minutes ago. Now, guys, we had an $8 Patreon level, and I kept telling everybody the price is going to go up, the price is going to go up. And I don't think many people took me seriously. The $8 level has sold out. It's a $12 level minimum. Mo's $25 level is going to $49 before he sells out. We're closing it up here in the next few days to go to a $49 level. The $100 level has sold out. It's going to $250. I don't just say these things. I want to make this a very tight community. I want to debut something though. Seth, can I debut it?
We're gonna wait, Paul. We're gonna hold off on that.
We're gonna
Ain't nobody got time for that at the moment because we're gonna wait a little bit to debut.
There's a big debut of the Everything Money website. Yeah! It is in its early beta. It is ready to be shown. Please stay on the live stream to see it down the road.
Valencio says, I'm bullish on Everything Money.
So am I.
That's great. We have lots to talk about today. We will debut the beta version of the Everything Money website that we are concocting in the background, and will be our release date. Our formal release date will be in April, but patrons, rest assured, you will be beta testing this like bonkers, and when you see it later in this live stream, you will freak out as much as I did. So Paul...
Why don't we say we announced it at 2 o'clock, so 56 minutes from now, we'll show it.
Okay, 2 o'clock it is.
Stay on. 2 o'clock, we're going to
set your watch. 2 o'clock, we will debut the Everything Money app right here on the show. The Everything Money website right here on the show. Okay, guys. And yes, you can always upgrade Patreon later. Goldie, I love you. Okay, and as always, Steven is correct. Make sure you tickle that like and tickle Paul in his little baby shorts today because he loves getting.
Oh
that
yes,
tickle.
I have shorts today. These are tennis shorts by Penn.
Look at you. Look at that. Look at that. The frothy.
It's what I wear to play tennis.
Oh, see, the camera, Paul, isn't... We lost our camera guy, Nathan, to a European trip. So when we get him back, you will get a full buttocks view. Oh, no, Paul's moving the studio now. You will get a full buttocks view. Oh, here he is, Don. Yeah, here he is. A full buttocks view of Paul and his frothiness. Yes, here we go. Okay.
What's this from?
We're wasting time, Paul. Let's
What's
go.
this from?
I have no idea.
Seth!
I don't know.
What day is today?
Groundhog Day?
It's in the movie Groundhog Day. When, what's his name? Chris is up on the stage for the ladies. He goes like this.
I'm shocked that somebody he said what day is today and he just goes Groundhog Day. What other day would it be?
That's
would
true.
have never gotten that.
That's true. Oh yeah, Ayrton saying move the camera down. We will get plenty of Paul's midsection here moving forward, but let's get on it with some of these 8-pillar analysis. Paul, let's talk about our first company.
Paul, stand on the chair. Matt, you're fired. All right, Kohl's is our first company, correct?
Yes, it is, brother.
All right, guys, look at this Kohl stock. This is a whirlwind over the last year.
Mm-hmm.
Okay, market cap, $6.9 billion. Now, obviously, the last year has been tough. It is a negative PE, so that's an X. Profit margin obviously is an X because they haven't made money in the last 12 months. But look at this gross margin. This gross margin is solid, 39%. They used to pay a dividend of 6%. Now they pay 0. It makes sense. They want to conserve their cash. But so far, 2 X's. But again, this is one of those examples of it's retail. It's been hurt a lot in the last year. Let's look at how they're rebounding and what their future plan is going forward.
Pillar number 3 is revenue growth over the past 5 years. Paul's going to look at the revenue on Y charts, and I assure you guys that moving forward, we'll be looking at all of these stats on our own Everything Money website, which we'll show you later. So go ahead, Paul.
19.2 to 18.9. Keep in mind, this is going to January 2020. And also, for the new Everything Money website, the years will not be the most recent full year. It'll be the most recent 4 quarters. It'll be split up at 4 quarters at a time. That way it's more accurate in terms of years. I don't like the way Y charts does it. That's one thing I'm changing there. So it is an X here on revenue growth.
How about profit growth? Pillar number 4 is profit growth, Paul.
Before the shutdown, 673 to 691, it is a check mark. But as you remember, in the last 12 months, they have lost $207 million. But it's still a check mark based on what we're doing for this analysis.
Pillar number 5 is shares outstanding, Paul. We obviously want this number going down. Not very obviously. Why do we want this number going down, my friend?
When you have a big pizza pie split 4 ways, when you're issuing more shares, you're cutting up the pizza into more slices. So before, you owned 1 slice that was this big, now it's this big. It's kind of the same pie more ways, but when they're taking shares away, it's almost like they're taking away slices of pizza. You're getting a bigger piece of the pie. So as an example, if a company makes, the bottom line is, if a company makes, the company has 10 shares outstanding, it goes to 9, you own 1 share, you went from 10% up to 11%. If it goes from 10 to 11 shares, you go from 10% down to 9%. So you want the shares going down, and that is a check mark here. Significant decrease in the share count, almost 25%.
Pillar number 6 is current assets greater than current liabilities. We want, obviously, them to have more assets than liabilities, Paul.
Current assets, cash on hand is about $6 billion. Current liabilities, 3.75, so check mark there.
What about total liabilities, Paul? We're getting close on that. What do you think?
Total liabilities is $10 billion.
Okay, not as good. I hear you.
I mean, the reason I don't like looking at total liabilities is because there's so many things that make up total liabilities. If they owned all their real estate and they had assets behind it, that's a totally different debt than just a lease obligation. So that's why people have asked, like, why don't you look at total liabilities? I do, but I want to see right now how is their strength in the current position right this very second.
Go back 1 to shares outstanding. Stephen has a great question.
Yes.
A question with the pie thing. I get having more shares and getting a bigger piece, but what does it matter to me as investors since my share count is staying the same? Why would
Great question. So I'm going to do, this is a little bit of a detour, but I think it's important.
That's okay. Go ahead, Paul.
Okay. Let's say a company makes 10, 12, 14, $16 year 1, 2, 3, 4. Okay? Let's say there are 10 shares outstanding. $1, $1.20, $1.40, $1.60. So with 10 shares outstanding, every share gets $1 here, $1.20, $1.40, $1.60, right? Because it's 10 shares outstanding. Let's say now they go to 12 shares. Let's say that now they go to 12 shares outstanding. Now you're getting 83 cents, $1, $1.18, call, I don't know what the number is exactly, and $1.30. I don't know what the exact number is. So you went from getting $1 for every share outstanding to 83 cents. The same token, let's say they go down to $8. Now you're getting $1.25, now you're getting $1.50, now you're getting $1.75, and now you're getting $2. So when the shares go down, you get a bigger piece per share. At the end of the day, I look at the total numbers, but when they're decreasing their share count, you're getting a bigger piece of the profit. When they're increasing their share count, you're getting a smaller piece of the profit versus before. So a company that's growing but issuing a ton of shares is hurting you more than a company that's staying the same but decreasing the number of shares. You're getting a bigger piece of the pie now. And that's the whole, because your share count stays the same whether they issue shares or not, or take shares away. That's why this matters. Does that make sense?
Yeah. So we're looking at Kohl's right now. We're through 6 pillars. We have 3 X's and 3 checks. Their PE ratio is low. I'm sorry, their PE ratio is a bit high. I'm sorry, there's no PE ratio, and the profit margin is terrible because they haven't been making any money. Pillar number 7 is free cash flow growth. This is one of the most important pillars in Paul's mind.
Okay, so free cash flow before this year. So this is 700 million to 800 million. So check mark there. Yeah. Average of 1.4, 1 billion, and 1.6 billion.
Getting the free cash flow average right now divided by 5. Free cash flow is 1.1, Paul.
1.1 billion.
1.1 billion.
This is retail. Usually we sit there and say we want it less than, what was the market cap of this company? Did we even look?
7 bill.
7 billion. So right now, it's selling for about 6.5 times free cash flow. Check mark there. Now the question becomes, where is free cash flow going? So it's a check mark on both free cash flow growth
and price to free cash flow.
Now let's see what's done the last 12 months. Last 12 months.
While Paul's looking that up, make sure you guys are tickling that thumbs up. We really appreciate your support. 158 of you watching, we welcome you in. And make sure you're giving Paul a little tickle on his backside. He enjoys that. So go ahead, tickle that thumbs up.
In the last 12 months, they've done 1.1 billion in free cash flow anyhow. So the average is what they've done the last 12. So you got to decide to yourself, is 6.5 times free cash flow worth it for a company like this? Boy, it just seems cheap. It doesn't seem like a lot of money to pay for this company is very large. Let's see what their income has been for the last 12 months while they were in shutdown.
Please do.
It fell to 15.7, and quarterly, I mean, look at this. So the quarter, 6.5, and it's growing back up again. It's almost back up. And the thing I like about Kohl's, guys, I do know this about Kohl's, they're trying to make it very easy for you to return. They're trying to make themselves a center for Amazon returns. Because they want you walking into their store and going, oh, you know what, I need this. And they're trying to make themselves a hub for Amazon.
Do you know when they did that?
Say again, Mo. I'm sorry. Go ahead, Mo.
It was years ago?
Yeah, years ago.
I thought it was right before coronavirus. And then that happened. It's like, oh, well, people don't go to stores anymore. Okay, good.
No, they've been doing that I think they tested it in different stores for a while.
That's a great way to drive people to your stores.
Absolutely. And so, to me, 6 times free cash flow is awesome. Where was it? I mean, look at where it was. If you were willing to look past the fear of it, guys, it was selling for what was it selling for here? 1.5 times free cash flow back in the fall, back in the collapse of COVID, back in April. Listen, I think you should do more due diligence. What's their debt look like? How much of that $10 billion is lease obligations? Retail is dying, but it's not going to go away forever. I think Kohl's is kind of like what's the market for Kohl's? Like, who goes to Kohl's?
To me, I think it's like moms and dads with school-age kids that go and buy discounted shoes, and I mean they have everything at Kohl's. I think you can get.
Say that again, Don.
My wife shops there too.
There you go.
Yeah.
I know they have like bedspreads and kitchenware and whatnot also. So
those Nike swoosh things I have, I got those from Kohl's.
Oh, really?
Yeah. I did it online, by the way. So you look at these things saying, well, how much is Amazon going to be affected by it? I mean, listen, people still like going out to shop. The question isn't, are all shops going away? It's which shops are going to go away. So you got to understand more of, does Kohl's have what it takes to make it long-term and be a player? I mean, $18 billion. I mean, look at TJMaxx. I mean, TJMaxx, I think it's going to be hard for TJMaxx to go completely gone because they have a very specific, but either way, we should actually add TJMaxx to this list. Maybe we'll do that.
They're a great brand.
For the first time ever, should we let Mo talk about momentum?
Let's do it.
Yeah, so before I get started on this, let's remember that value investing and trading are very different. So when I talk about something that's going to fall on us, it's not necessarily based on what Paul was talking about. So I'm going to use this as a teachable moment. And we've talked about, you've seen my videos online about the 50% rule, and this is a perfect example. This is going back to May of 19. We have a top here, a bottom here, and we're kind of in this in-between range right here. So this stock, this right above here, this is called overhang. This is the area where there is a lot of resistance. So we can see that it's coming up and it's getting into this overhang area. More likely than not, it's going to fall on us. And let me zoom in here and show you the trend today.
What do you mean fall on us?
Say that again, Paul.
So the stock price, I'm going to show you right now. Okay. So as you can see, we had a trend. This is our sweet spot between 80% and 32% on our stochastic. Moved up and it just went sideways for a very long time. As you can see, the stock price continued to climb. Today, we got our first red candlestick on the long-term trend, and our stochastic line dropped into the sweet spot going in the negative direction. So for me, I'm looking at a short on this stock today. I'm going to throw one tracker share on there. You've seen me talk about tracker shares in my YouTube videos, and just keep an eye on it, and let's see if this thing continues in a downward trend.
Paul, your thoughts on Mo's first performance in front of the board?
It's pretty good. I mean, I think he should explain some things a little bit more in quick detail when you say, like, this is like when I said, what's an overhang? That's it. I think it's pretty good, though.
Yeah, we're getting some positive feedback on Mo. Is Mo's shirt inside out? Obviously, he's shredded. All hail Mo. We love Mo. I would say, Paul, one question someone said, my apologies. Someone said, why did you choose a 5-year average free cash flow, not 3? I don't know. Why is that, Paul?
It was just something, I've read in the past 7-year average. I mean, a lot of people would say I've even considered doing a 10-year adjustment based on inflation, like they do for the 10-year earnings for the S&P. There's a lot of ways to do it. The great thing is the new Everything Money website with the software I'll be able to decide these things, but the longer term you go, the more fluctuations you can take out of the situation, and that's the point of it. But the longer term you go, you want to have your multiples adjust accordingly.
Paul, Don, will you put that question back up? I just saw. I didn't see it real quick. We have a question from the live stream, Paul, and I would say yes. People are commenting that it seems like you have some overhang in your pants at the moment. Why do you guys choose a PE ratio under 20? Isn't the PE ratio different in each industry? Mattia, great question.
I don't look at PEs from industries because to me, $1 of profit is the same whether it's generated from tech or whatever. I look at growth rate to adjust for PE and the price to free cash flow ratio. That's what matters to me. Now, with that said, obviously a higher profit margin is much more exciting to me. It's a gross margin much more exciting to me. But I always sit there and say, I don't care if a dollar is generated from real estate or one of our other businesses. It's still a dollar. Now, what I can do is adjust the multiple based on growth rate. What I'm saying there is, if I have a very mature real estate business that doesn't have much growth left versus a new business I started that has a ton of growth left, which one do I want to pay more for a premium on? That's the question you have to ask.
Paul, the comments are flying in. Mo trading, Mo money, boom, Mo stop. And Paul, your new saying, which Juan, God bless you, you should just start saying my apologies because you're Paul, and there are certain Paulisms about you. You should just, everything is my...
Did I say my apologies?
No, you need to, my apologies because you're Paul. Anyway, you're not catching on as much as I'd like. Okay.
I do like Mo trader, Mo trading, Mo problems.
Mo pretty good one. Yeah, Mo stop. Listen,
Mo money, Mo trading.
If you're excited about day trading, join our $25 Patreon, which will certainly fill up and go to what price, Paul?
It's going to go to $49, and before it fills up, we're actually ending it very shortly in the next few days. So if you want to do this, now's the time to do it because it's going to $49 here by the end of the week, probably.
And I just kind of made a video series in there right before I came down here. So I'm on there all the time talking to you guys about trading, answering as many questions as I can. I think I get all of them.
Great. All right, guys, this is incredible. Paul.
Somebody said something about Mark Cuban, that Mark Cuban says that fundamentals only matter when it comes to a dividend. No disrespect to Mark Cuban, but that's absolutely ridiculous. That's a stupid statement. Stick to basketball, stick to tech. That's an absolutely dumb statement. So I'm going to go ahead and dividends do matter, but dividends, you would want a company, theoretically, that doesn't even pay dividends because they're able to invest their money at a higher cash flow rate. So why pay it out in a tax inefficient manner? Paying dividends out is tax inefficient because they're taking after tax dollars they've already paid taxes on and forcing you to pay tax again. Versus taking that money, keeping it inside, getting a double-digit return, and making your stock value go up. So no disrespect to Mark Cuban. Actually, full disrespect to Mark Cuban. That is absolutely wrong. That's stupid. Do not listen to it.
Okay, great play. So final take on Kohl's, Paul, as we wrap up.
I think it's interesting. I think you'll understand the debt. If you believe long-term that they're going to be a big player, that's the big question. Are they going to be a big player? Are they going to be around in 10, 20 years? If they are, this is a great multiple to buy at. I mean, once the dust settles, and Amazon's not going to grow like this forever. Do I think Amazon will be huge? Yes, but Walmart's already taking away some of Amazon's growth. They're doing a great job. I ordered something from Amazon the other day, and it came in a Walmart box. Mm-hmm. That's what's interesting to me.
I'm sure Target will get there, too.
Target will get there, too.
Yep.
Which NBA team does Paul want to own? Not the Cavaliers, to my dismay. Paul, which team would you like to own if you could?
I don't care what team it is.
Milwaukee, probably, right?
In 2008, I had a deal to buy part of the Miami Heat. It was very close to closing, about 2 weeks away.
Tell them the story about LeBron. You got it about the golf course and LeBron staying.
Oh.
Just tell them.
So I had a deal to buy part of the Miami Heat in 2008. I bailed on the deal because the majority owner, Mickey Arison, was changing one of the partnership docs that greatly affected what we were told about the deal. So I bailed on the deal with 2 weeks left. Fine. This was 08, so LeBron hadn't left yet. LeBron's coming to his free agency. I'm on the golf course the day he's going to announce his free agency. I get a phone call on the golf course, Lake Forest Country Club in Hudson, Ohio. I'm on the golf course. I still remember it was the par 5 uphill. Guy calls me, the guy who brought the deal to my guy. I said, Paul, I got an opportunity for you. What's up? He goes, if you wire me $500,000 right now, that deal is yours. You get a piece of the Miami Heat. LeBron's going to Miami. I said on the phone, I go, F you, he's staying in Cleveland. I'm not doing it. Click.
Whoops.
Crickets.
Whoops. Well, this is real awkward.
I mean, that's what happened. And listen, look at it. Talk about FOMO. I have no FOMO about that deal. I left that deal for the right reasons. Did it end up happening when he wasn't able to get his changes in, but I left the deal for the right reasons. I have no FOMO. The fact that our partnership would have made like $50 million, who cares? It's only money. But I have no FOMO about that because I made the decision based on the right I made the right decision based on the information at hand at that time, and I wasn't willing to go battle a multi-billionaire in court for my small piece of the Miami Heat. So that's my biggest example of, if anybody should have FOMO, it's me, and I don't have it at all for that deal.
Don't have FOMO moving forward in this week. Our patrons, you know I love you. Paul and I and Mo are on there all damn day talking to you. This coming Friday at 6 p.m. Eastern, we will have our February fireside chat at Paul's mansion. The three of us will cuddle up with a bubby and sip some tea and beers and answer just the patrons' questions. So we will have a live stream, probably around 90 minutes, if not more, taking all of your patrons' questions in depth. And it's a Patreon-only exclusive live stream we'll have this Friday. Don, our dear friend and producer Don, will put up an announcement in the Patreon, so we'll see you all there. Paul, let's move on to Costco. People love Costco.
I love Costco. I get my gas at Costco.
I went to Costco yesterday.
Did you?
Yeah.
My gas at Costco is like 50 cents per gallon less.
Come on.
I don't go out of my way to go there, but at the same point, I mean, sometimes I do.
It was 50 cents less than Circle K.
Oh, Circle K is super expensive. Why do you go there?
Can we carry on, boys, with
house.
Costco?
Okay.
What is the market cap on
I mean, it's just
Costco?
that Circle K is super expensive here in Richfield, in Bath. $160 billion. PE, 37. X marks the spot there, guys. That is bad. Profit margin, 2.7%. 4.3 billion and 172. It sounds about right. Still an X.
Still pretty low.
The food
okay.
business is a very low margin business, guys. Everybody thinks these grocery stores and centers, it's very, very low margin. So just be ready for that one. And a dividend about 0.8%. So we currently have 2 X's, and a dividend of 0.8% means every year they spend about $1.2 billion on dividends. So when we look at the free cash flow, we want to make sure they make enough to really easily cover this dividend, because not all dividends are safe. Everybody thinks they're safe, and they're not. You have to make sure the free cash flow can adequately cover the dividend so you don't ever lose it. Because Mark Cuban wants dividends like crazy. So according to Mark Cuban, guys, this is the company that matters to look at fundamentals.
Pillar number 3 is revenue growth over the past 5 years for Costco, baby.
Revenue growth over the last 5 years. Let's look at this. 118 billion and 167 billion. Chickadee check. You know what I'm going to say, though?
Go on.
One of the most important aspects of this is how much of this was driven by new openings versus same-store sales. So one of the things you want to look at on a year-to-year basis is how have their same-store sales increased every single year. That's what you want to focus on, because if sales are declining but they're opening more locations, they can show an increase in sales versus every store declining. So it's important to see what's happening at each store. Same thing as Kohl's, the past one. I don't know how many Kohl's are opening these days, but we'll find out.
Pillar number 4 is profit growth over the past 5 years, Paul.
Profit growth over the last 5 years. 2.35 billion, 4 billion. Check mark there.
Very nice growth. Pillar number 5 is shares outstanding. We want the number of actual shares out there going down.
438 to 442. X.
Uh-oh.
Not a huge jump. 1.5%. So it's not a big deal. For every 100 shares that existed 5 years ago, now there's like 101.5 or so, give or take.
Pillar number 6 is current assets over current liabilities, Paul.
All right. I'm guessing this is in the negative. Food businesses tend to have a negative ratio.
Okay.
So 32 billion in current assets versus 32.7 in current liabilities. Yeah, it's a negative. Barely an X. Barely an X, but it's still an X.
Okay.
Now for the granddaddy of them all.
Free cash flow growth is pillar number 7. This is cash from operations minus capital expenditures.
600 million. Mm-hmm. 6 billion.
Good Lord.
Wowzer. 4.2, 3.8, 3.3.
Good Lord. Give me a second.
So, what is the average, Uncle Seth?
Well, you know, you're standing in front of the numbers. Give me a second. 3300. I'm going to get this wrong. Here we go.
I'm going to do it right now.
3.5, Paul.
3.5.
Yep,
okay.
the average free cash flow growth over the past 5 years is 3.5 billion.
Now, this is the revenue is growing adequately here. The free cash flow is growing adequately. It's a big company, though, so you have to weigh out how established it is, how big it is, et cetera. At 20 times, you're at $70 billion.
Let's step back real quick. Folks, if you're new here, we use our free cash flow as our pillar number 7. Pillar number 8 is we take a multiple of this free cash flow to get a desired market cap we want to pay for this company. In this case, it's 70 billion, Paul, and the actual market cap
is 160
is 160 billion. We're way off.
So we're way off. But one thing I want to make note is their dividend is 1.2 billion. They have plenty of money to pay that dividend. It is 70 billion. It was a big jump. So there's 6 billion here. If you just base it on the last, actually, let's go to the trailing 12 months. Let's see how the trailing 12 months looks in terms of their free cash flow. And again, the Everything Money website will only look at the previous. It'll be a much better version than this.
We will be showing the beta version of our Everything Money website here in about 30 some odd minutes. So stay tuned for the greatest single day of your entire life. It's happening right now. Get excited.
So right now, the last 12 months was 6.4 billion, so it's increasing. So Seth, what's 160 divided by 6.4? 25?
Yeah, 25.
So right now, the previous 12 months, the ratio is 25 to 1. So it's not far off if you think the free cash flow is still going to go higher and higher from here. And it has been increasing every single year. So this isn't terrible. So the things to look at further in this company is same store sales versus new company, new growth. How are they internationally? Are they out there internationally? Look at Sam's Club.
People are saying
Costco.
people are saying that they're putting them up. They one opened in China. People are saying they're seeing it internationally. So
How many stores do they have?
will someone look that up for us while we go over
I think
to?
they have it right here.
Okay, go ahead, Paul.
They have 795 stores worldwide. That's not a lot of stores. I mean, that's not a ton of stores. What does Sam's Club have? Mm-hmm. I mean, there's a lot of growth potential in this company. So even at this price, could I make a justification? If you're going to plan on holding this thing for a long time, 20 years, as long as they don't increase that share count too much, I believe that they can sit there and still justify close to this price. It doesn't have to fall 30, 40% to justify it. But you got to make sure that the revenue growth and profit and free cash flow growth is still sustainable, and look at what their potential market size is.
Mo is going to pull up the momentum right now. No pun intended, Mo and momentum. Let's look at momentum for Costco.
So since December of this year, we have definitely been in a downward trend, and you can see that reflecting on their stock price. Now, the way I'm looking at this stochastic right now, how it's on the bottom, we are clearly out of the sweet spot, and we're kind of just trickling on the bottom. If this is me playing it, what I'm going to do is take one tracker share and buy Costco to go long. This could take a month, it could take a day, but when Costco's trend changes, I want to be in that. And Costco's trend does change quickly. You can see how quickly it goes from negative to a positive, to negative to positive. So this is what I'm going to do. I'm going to buy one tracker share on here and hopefully catch it on the way up. But you got to be patient. Do not start adding until you're in that sweet spot area.
Paul Marcus says there's 600 Sam's Clubs worldwide.
600, that's it?
Yeah, that's what they're saying.
Wow. Okay, so, I mean, I look at 795. Let's say they're all in the US, which they're not.
They're not. Canada.
Say that again.
Definitely Canada.
That's 16
Canada,
or
yeah.
17 per state. That's not a...
Broken down there for you, 73%.
Oh,
I'm sorry, say that again, Don.
73% in the United States. So 73%, that's 570. That's 11 or 12 per state. That doesn't seem like a lot.
And it's funny because I think it was in 2018, they said that they wanted to be within 20 miles of every house in the United States.
So what would that, how many locations would that take?
I have no idea. You're the math guy.
Well, it's not about math, just it's also
Well,
about...
think
Paul's our quant. Just
He's
look
the
at him.
quant.
He's our
You're the
quant.
computer.
He doesn't even speak English, folks. You know what that's from?
Of
The
course.
Big Short,
Yeah,
when he
of course.
goes, this is my quant, he doesn't even speak English. And the guy's like, yeah, I speak English. He just likes
that's
telling
right.
people.
That's right.
Oh, okay, that was our take. That was our take on Costco.
Listen, I'm not opposed to Costco. I do think that you should watch the stock as a good stock to own if it pulls back quite a bit. Go ahead, Mo.
Another great thing about Costco is
Hold on, say that again, Mo. I'm sorry.
another great thing about Costco is they pay that special dividend every 3-4 years. In 2020 they paid a really big dividend. It was almost $10 per share to shareholders as just like a thank you. I know they did another one in 2018. So that's another benefit of being in a stock like Costco. So if we can get this at a low enough price based on value, that would be great.
Mo, you do have a question here. Billy said, Mo, would you say you can average cost down at very low amounts instead of a tracker?
So that's not what I like to do when it comes to trading, because with trading, I'm trying to give myself the highest probability of making money. If I'm doing value, sure, I'm going to dollar cost down. But if I'm trading, I want to go in there and grab money and try to get in and out, making the most money I can without having to buy lower and lower and lower. That's why I buy. Charts give me a higher probability of making money, so I'm going to use those to my advantage.
Nick is asking, will software like Mo is using be added to the app, Paul?
Yes. Most software will be very expensive to make. It'll be added, but it'll be an extra feature because of how expensive it'll be. We do have to charge individually, but we will be creating at some point in the future software like Mo's for Mo to use that he likes himself. It'll be a very, very big endeavor. It will be quite the task.
It's going to be worth it. If you want to trade, what I've always wanted to do is create this, and it's going to happen. So it's the best. It's going to make you a lot of money. It's going to almost tell you when to buy and sell. It's awesome.
Matt Jensen says Costco has 110 stores in Canada, 39 in Mexico, 29 in the UK, 27 in Japan, and 16 in South Korea. That's quite diverse.
It is,
Yeah.
and the question is, how big is their market? Like, how many stores can they get? Let's say they peak at 1,500 stores. Well, you got to remember that saying, well, they have 800 right now. To go to 1,500 is about doubling, so you got to factor that into their growth potential and how long it'll take.
Juan is asking, as a value investor, do I have to have a concern about trading, or I just need this information to estimate better in and out and then forget about it?
That's a great question. I look at them totally different. However, I do believe in using the trading method to determine your exit and entry in value investing. Like if you start seeing a point where Mo says, hey, this is a short position right here, and it's likely to go lower, maybe you just then use that to dollar cost average into. If you're gonna see a big jump, but don't change your decision on one or the other based on the other one. Value investing is like, hey, I wanna own this company, let me look at the charts and see, will there be potentially a better buying time? I prefer to use options to buy value stocks at better prices.
I do use, they are different, but I do use charts to my advantage when I'm looking at selling a covered call or something. Where's that next resistance line? Is it likely to hit here or higher or lower than that resistance point if I want to keep the shares or get rid of them? Yeah, that's it.
All right,
another good thing about Costco, wonderful online shopping.
Is it?
Wonderful, yeah.
I bought, you know those tables you borrow from me, the white tables?
Yeah.
I bought those from Costco
Yeah,
online.
they're awesome.
That was 10 years ago though, and I don't remember how it was.
They're still in my basement, by the way.
Oh, are they really?
Yeah.
Hey, how about you give them to me?
That was our take on Costco. Thank you, guys. You're awesome. Again, at 2 o'clock, Paul will be teasing the beta version of the Everything Money app that all of you patrons, you wonderful patrons who are supporting us and yourself with the amazing opportunity to get this awesome app. You don't need wide charts. You need the Everything Money website to analyze these. And wait till you see it. Your jaw will be on the floor. Let's keep going, Paul.
Yeah, so now we're doing Dollar General.
Dollar General, Paul. Tell us about this company.
$48 billion market cap, so about $50 billion. PE, barely below 20, but it is a check mark.
Nice.
Profit margin, says right here 7%. In the last 12 months, it looks about right, about 7%. So that's an X there, sorry. It's below 10. Again, these are not set rules. They're just ways of screening things. And a dividend yield of 0.75%.
How
what
adorable.
do we think about that?
Adorable,
That's
as Paul would
adorable.
say.
That's 375, let's call it $400 million to be conservative. It's actually lower than that, it's more like 360, but we'll call it $400 million right now based on this. So, right now, one check, one X, $400 million in dividend yield, so we have to make sure that the free cash flow can easily support that.
Pillar number 3 is revenue growth over the past 5 years.
Revenue growth of the past 5 years. 20 versus 27.8, check mark there. It's surprising because they tend to do better in recessions. This is one of those companies that in recessions will do better. A lot of growth, Again, how many were because of store locations being open versus how much were in same store sales increases?
Pillar number 4 is profit growth over the past 5 years, Paul.
1.165, 1.7, check mark there.
Okay, are you formulating your growth factor number for pillar number 8 already?
I'm thinking about it.
Pillar number 5 is the shares outstanding. We want this number going down.
294 to 256, check mark there.
Nice.
So they're buying their shares back with their free cash flow.
Current assets over current liabilities is pillar number 6. All of these pillars you will get with the Everything Money app in April. So it'll take much less time for you to evaluate companies. Pillar number 6 is current assets over current liabilities, Paul.
7.5 billion in current assets, which is basically cash on hand, and 5.9 billion in current liabilities. So check mark there.
Check mark there.
Got a lot of check marks here on the good old DG.
Yeah, this is Dollar General. The only X we have is the profit margin, which is a little low.
But that's expected for a company like this.
Free cash flow growth is pillar number 7, Paul.
Free cash flow growth.
Go ahead.
800 million, 1.5 billion. Check mark there. And remember, their dividend was about $400 million, actually a little less. So they can easily support that dividend here. Now, for the average, 1 billion, 1.2 billion, 1.4 billion. Wow. This is going up consistently, guys.
The average is 1.18 billion, Paul.
1.2 billion times 20, 24 billion needs to fall in half.
Uh-oh.
Now, keep in mind, guys, this is a good company for recessions. It tends to do well in recessions because as people make less money, they're looking to save more money when they go to Dollar General. I do still think, even though the PE was under 20, something's telling me a different story about why is it telling me, oh, well, that's why, because obviously this thing has jumped up a lot. So the question becomes, how have they done in the last year? Let's see how their free cash flow has gone in the last year, guys.
While Paul's looking at that, make sure you tickle that thumbs up. We really appreciate it. Paul loves to be tickled on his nether regions, and we appreciate you tickling him. And the thumbs up. That's all you have to do. All this information bringing to you. Oh, go ahead, Paul. What are you finding?
Wow. Big jump in free cash flow, up to $3 billion. Now it's selling for 16 times free cash flow.
Wait a minute now. Wait a minute.
Okay, so we had a bad year economically. Drove up Dollar General because a lot of people probably went there to save their money. So if you guys look right here, let's look at quarter by quarter. This is what I want to show you guys. Part of the thinking that's involved when you see numbers and say, what is going on here? Why did their free cash flow go from 1.5 billion to 3 billion in 1 year? Here's quarterly. So look right here, guys. Look at these quarters. Look at these cash from operations. 575, 556, 530, 577, 1.7, 1.2, 476.
Good Lord.
So because of this, I am not giving them the $3 billion in free cash flow ongoing because they're already back to normal levels now. So I still think this is the company that even though the last 12 months have been very, very good, I believe that it'll stabilize back to more normal levels and you still need to pay a lot less money for the company. That is my personal opinion. Again, make sure that they're opening stores but also getting their same store sales price growth up. And I'm going to look at that while Mo talks about his stuff.
Go ahead, Mo.
Okay, so Dollar General is, since November of last year, definitely in a downtrend. Now, this is pretty boring. Let me bring you over to the daily chart, which kind of shows all of this mess. So right now, this white line here is the 200-day moving average. Turquoise is 100-day. The purple is the 50-day, and the yellow is the 25-day. So in order for this stock price to get through all of these moving averages, what we're going to need is a lot of energy. Energy is volume. And this is going to be a big driver. This green candlestick right here, this green volume stick right here, we need several days of that in a row to drive this thing into some kind of positive momentum. So right now with Dollar General, I'm probably not touching it. I'm just sitting here and waiting. And if you want to keep it on your watch list, go for it. But this is a tough stock to trade right now just because it has a lot of things going against it from a technical standpoint.
Edwin asks, wouldn't it be easier to find value in small mid-cap because they're lesser known?
1,000%. Great question. Absolutely. The less popular stock, the smaller the company, they're followed by less people. much easier to find value, but also sometimes takes a little bit longer to see that value. But 100%, you will get better returns on value plays in small and mid-cap companies, 1,000%.
Final take on Dollar General, Paul.
So look at this. In 2019, they achieved their 30th consecutive year. And by the way, where am I reading this from?
10K?
The 10K. I went to the 10K. I just searched same store.
I would say, folks, we just did a video where Paul went in depth on how to acquire and look at a 10K. It'll be published this week. We have another Workhorse video coming out, an update on Workhorse. That'll be coming out this week. Right, Don, would you say? Tomorrow, Don says tomorrow, the Workhorse video will be coming out. And again, at 20 minutes from now, we'll be debuting the Everything Money app. So final take on Dollar General, Paul.
Like I was saying, they achieved their 30th consecutive year of positive same-store sales. That means usually same-store sales in the retail world is stores open more than 1 year. That means that for 30 years in a row, every store that was open more than 1 year saw a positive increase overall in the sales versus adding new stores. That's awesome. That's great. The question becomes retail-wise.
Hunter is saying they're mostly in the Midwest, Dollar General, and he's actually saying that in most of the red states, there weren't as many shutdowns with COVID hardly.
Dollar General operates 16,000 stores in 45 states.
That's amazing.
16,000. Costco has 800.
It's amazing.
These guys have 20 times more stores than Costco does. Now, I'm sure the average revenue per store is a lot lower for Dollar General than Costco, but still, that's an amazing number.
All right, that was our take on Dollar General. Can we take a brief pause, Paul?
What would you like to pause for?
I'd like to take a moment of likeness. If you could pretty please, with sugar on top, just smash that thumbs up. We ask for very little, and we give so much of our time. Paul and I have been in this room for over 2 years now, really committed to YouTube and our viewers, and we love you. And you guys have rewarded us with an amazing Patreon program that's just overflowing with love and community. So we appreciate all the time and effort you guys are helping with us. Z Survival is saying, our baby H&R Block is creeping. What are your thoughts on H&R Block, Mo?
You want me to pull it up right now?
Yeah, let's do that real quick,
see.
just for a short little break.
So H&R Block has been something that we have been following in my chat for this whole week. Okay, so what I've said over and over on H&R Block, we are in the sweet spot right now between 32 and 80%. We had this big run up. We bought this stock on this day when we had this big candle. This following day, we were up about 10%, and all of us took profits right around here. So we made this money, and this candlestick right here with this long wick, that means that the stock price pulled all the way back down on us. So I think that day it closed up 2% instead of being up 10%. What I want to see now is candlesticks like this, much bigger. So what he means by creeping, we're looking for these candles to start moving up on us with something like these big green ones right here. And if I can just take one more second and pull up a line chart. What we're looking for are these W formations. So I made a YouTube video on W formations. These are extremely important in adding to stocks. This is what you want to see on these line charts. You want to see the right side of your W being higher than the left side. Right now, we made this base right here. I said I wanted a pullback in the stock price, and we got that pullback. Right now, this side of the W is higher than the left side. So I just want to keep seeing this momentum upward. So we're not buying right now like Zach really wants to buy right now. My price was, I think, $18.85 is where we were going to add to it. So let's just keep an eye on H&R Block. Remember, this is from a trading perspective, not a value standpoint. But yeah, H&R Block is going to be something good.
Thank you, Mo. Listen, I just have to say, you guys out there commenting, we do this to interact with you guys. Dads with Purpose, Paul is a huge new follower of ours. He's incredible.
Huge fan.
And he just gave me, I'm literally crying in tears of laughter because I do need to put like some sympathy music, some soft playing, like a Sarah McLachlan sympathy music when I ask for likes. I'm just envisioning. The funny stuff. Listen, so guys, if you're out there, this is the premise of our show. I'm just a normal guy. I'm a wedding photographer. And I get to sit here between these two guys who make boatloads of money in their spare time and learn. And I hope you guys are learning too. Paul, discuss what the Patreons are saying in Patreon about making money, being members. Just talk about like how people are making up their Patreon.
First
and
off,
go ahead.
If you can't like this image,
Look at that.
These are my pups. It was sent by my dog walker just minutes ago. Look how beautiful these dogs are. Howard, Oliver, Lucy, Sophie.
And to think you only paid 27 grand for these dogs is incredible, Paul.
Listen, she's kind of racist. She kind of bites people a lot. Lucy's the love of my life. Oliver's the love of a lot of other people's lives. And this is Howard. He's kind of Howard's special.
He's the best one.
We love him. We love him. He's the best. But anyways, guys, somebody to the highest level of it's the Paul Super Shorts chat. Most people in that chat. One person yesterday said, "I'm gonna make more in 1 month on options that I'm learning for you guys than the entire year's cost." I'm not sitting there saying that you have to go do that and see a direct cost, but joining Patreon and getting ideas from other people, not just the highest level, even those, our software, let's just do the software right now.
Paul, we can't do that because we spoiled 2 o'clock. We got to stick with it. I know what
Guys,
you
the
want to do.
software is so exciting. It's going to be so awesome. Like literally, if you won't pay $12 to get access to all this software and all this stuff, then what are you doing? $12 a month. I mean, I love when people say I can't afford it and they're like, hey, I'm going to go buy this stock now. I'm like, take one less share and buy our Patreon. It's crazy.
So, Don, so Mike says, for $27 you could have your dogs trained to take selfies. He also invested $8 grand to have those dogs trained. So,
and guess what? They're really well trained now. Thank you very much.
They are soldiers. So, okay, guys. So 2 o'clock. No, we can't do it now. I love you guys. 2 o'clock. We're gonna do it live. We're gonna screw it. We're gonna do it live in 13 minutes, and you're gonna freak out that you're gonna have this software. Patrons, just wait for it. It's gonna be incredible. Okay, Paul. That was Dollar General and a look at the momentum of H&R Block.
Are we doing Dollar Tree now?
Let's do Dollar Tree, Paul.
So Dollar Tree has 7,500 stores versus 16,000, including and 7,700 Family Dollar stores. So they have about 15,200. So they're almost, the same size as Dollar General.
If you're watching this video later, we do not do a ton of due diligence. We take a lot of these requests from our live stream. So this is just a first overview, a first glance at Dollar Tree to see if we want to look deeper. Go ahead, Paul. What's the market cap? What's the market cap of Dollar Tree, baby?
About $25 billion versus 48 for Dollar General. So half the market cap. I'm not saying it means anything specific, but around the same stores, half the market cap. Just keep that in mind.
Okay.
PE ratio of 25, that's an X.
Little high.
Little high. Profit margin in the last quarter, 5%, but the last year, it's about 4%. It's a little bit under 4%. So that's an X and no dividend. Okay? So according to Mark Cuban, we should not look at this company's fundamentals because they don't have a dividend.
In comparison to Dollar General's PE ratio was in the sweet spot that we wanted. So we're 2 X's on Dollar Tree. Let's look at the revenue growth, Paul's pillar number 3.
Revenue growth, last 5 years, 15.5, 23.6. Check mark there. Look at this. Big jumps. What happened here? Obviously acquisitions. I have a hard time believing they doubled their revenue in 1 year. There must have been the acquisition here. Did they buy Family Dollar? Was it a different store? I mean, I don't know. I want to skip right to the cash flow statement to see what they purchased back these years.
Good idea.
Oh, right here. So guys, somebody find out what they bought in 2016, please. They bought some company in 2016. They still had a big jump. That was pretty YOLO. Okay.
Pillar number 4 is profit growth over the past 5 years, Paul.
Is the profit growth? 282 million to 827. Check mark. But guys, look at this. 282, 896, $1.7 billion, lost $1.6 billion, 827. This tells me here that there was some write-off of some sort. Because I have a hard time believing they went from some one-time event occurred. How did they go from such consistent profit all these years to all of a sudden crash? So something happened here. So it's still a check mark, but watch out for that. Understand what that's from.
Dollar Tree completed an acquisition of more than 8,200 Family Dollar stores across 46 states.
I remember I said whatever it was Family Dollar, and that's what it was.
So it was a 2015 and completed in 2016. Thank you, Ray. Love you. Keep going, Paul. What is pillar number 5, the shares outstanding? Are they going down?
They're not. 222 to 237. That's an X there.
And
that's an X.
X on shares. And I hate
X on shares.
I hate to interrupt, Paul, but they want to watch check out there. What's on your wrist today?
Oh, boy, folks. This is the
What is
Sky
this?
Dweller.
Oh, boy.
The Sky Dweller. Why is Mo smiling there?
I assume this is a Fossil watch.
This is Fossil, if you spell Fossil, ROLEX.
So go ahead and Google that if you're interested in watches. Pillar number 6 is current assets greater than current liabilities, Paul.
All right, 5.2 billion down to $4 billion. So that's a check mark there. They have plenty of cash on hand to pay their current debts.
We're looking at Dollar Tree, 3 X's, 3 checks. We're still in the middle of the road here for pillar number 7, which is free cash flow growth, Paul.
All right, so free cash flow, guys. Remember, free cash flow is used to buy back shares, pay dividends, and make acquisitions. Keep in mind, they have more shares and they pay 0 dividend. So the free cash flow should be going right to the pocket to pay. That's something you have to figure out here. But free cash flow, 320 million and 800 million, 870 million. Sorry. So check mark there. Yeah! And then 1.1 billion, 900 million, 900 million.
The average free cash flow for the past 5 years is 820 million.
820 million times 20. If you want to do 20, it's 16.4 billion, and they're at 25 right now. And guys, I'm going to go ahead and say that increasing shares, I want to be lower than the 16.4. I don't know if 20 is the right number. So this is where we talk about, so it's an X here too, but this is where we talk about what free cash flow multiple do we want to pay. The free cash flow multiple, I look at it as an overall picture. Okay, the company's growing, but they're increasing their shares, not paying a dividend, which I don't really care about that much. But I look at it saying 20 times free cash flow. I actually think Dollar General is a better value than Dollar Tree. But let's look at the last 1 year. Do they have the same jump in the last 1 year on their free cash flow?
This is Dollar Tree.
Yeah, 1.6 billion.
Yep,
so.
This is Dollar Tree. Keep going, Paul.
So I sit there and go, okay, I want to pay a lot less than, so it's $100 a share right now. Guys, this is going to sound extreme, but unless they're going to buy back shares with their free cash flow, I want to pay about half. I mean, I look at this going, guys, you're increasing your shares on me. You're diluting me along the way. Give me a reason to buy your stock. Give me a reason. The reason's got to be somewhere. The bottom line is I'm not buying it at this price. Yes, we did an overview. The overview says to me, I'm not buying it at this price because they're increasing shares. The profit is good, but it's a little less consistent than Dollar General. So that's where I stand on this.
Mo, would you like to look at the momentum for Dollar Tree?
Yeah, good news for Paul. They are in a straight downtrend right now, and if they can break this, so we're going to talk about gaps up. This is a gap up where the stock price really jumps up on you one morning from one level to the next, maybe from $80 to $90, and it doesn't fill anywhere in between. Typically, when stocks jump up like that, they will eventually come back down to kind of fill that gap because there's none of those W formations in there creating any kind of support levels to move up. So I could see this thing moving down to this 90 level, maybe moving down to this 80 level. I mean, this is where they were back in March, April. So there's a chance. There's definitely a chance. Interesting thing about Dollar Tree. What is this, Dollar Tree?
Yeah.
Everything in their store is $1 or less. Dollar General, that's not the case.
So literally, Dollar Tree has $1 or less?
$1 or less. Dollar General can be up to maybe it's $10 or something, but not everything is $1.
See, I don't like that then. Like to me, I'd rather have Dollar General because just like Five Below,
Yeah.
I look at Dollar Tree going, at some point, you can't sell stuff for $1. I mean, 25 years ago, they were selling stuff for $1. I mean,
it's literally $1 or less for everything.
I prefer Dollar General right now based on what I see right now.
That is our take on Dollar Tree, everyone.
It's 1:54, Seth. We don't have time to do another company before we do this announcement at 2 o'clock, unless we want to answer some questions beforehand.
Yeah, let's do 5 minutes of Q&A. We have two other stocks we're going to do today, Target and Walmart. We will get to that.
And TJMaxx if we have time.
And TJMaxx, let's do it, yeah. But we will take some general Q&A. Paul, what are your thoughts about Tissot? Is that the watch company?
Tissot is the watch company. I think they're a great watch. I don't have any, but I do think they're a great watch.
I have one. I like it. It's nice. Sharif gave it to me.
Oh, really?
Yeah.
I've had one before, but I gave it to Tim as a gift.
Yeah. Let's do another cheap plug for our Patreon. Mo, will you tell us what you're doing in the $25 Patreon level that the lower level folks in the $12 level are not getting? If they want to bump up to the $25 level, what will they get interacting with you, my friend?
Sure. So it's $25 right now. It might not be $25 later in the week. Actually, it won't be $25 later in the week. So we go through there and we, now I can't do anything. Now, so what I do is, a lot of people ask me questions about their individual stock picks. I'll answer them for you. The goal of this thing is to create it so you guys can talk to each other and help each other out. I'm making videos all day in there, 1 minute short clips about your questions. I'm teaching a little bit. If when a YouTube video is posted, we'll go more in depth. So this is all about learning stock trading and kind of creating that community where we can all use each other and bounce off of one another.
Paul, what are your thoughts on the silver movement that's been going on this week?
Don't care. I mean, more power to people who want to get on board. It's hard for me to understand commodities like that, but silver's due for some big run-up because I think they've been stagnant for a long time. Lou Ellen made a funny joke. He goes, Tizo, more like toss it. And he changed the spelling. I thought that was funny. IPOs, I don't buy into IPOs. I wait for the dust to settle. Then I try to find value companies. There's too many companies out there to buy. Why worry about an IPO just for the hype? I don't really care to do that.
Ruiz is saying garage walkthrough video for our patrons. Paul is open to that. There's not many cars in there now. Just is the Audi still there? The Audi.
Yeah, I saw the Audi. I have an Audi R8 and a Range Rover, and I used to think I'd want a lot of cars, and I really don't.
Well, he gave his folks. He gave the Bentley away to his dad, so we're not driving that through the McDonald's drive-through anymore.
By the way, that's the first place I went when I got the Bentley. It was McDonald's drive-through.
But I would say that Paul has allowed me to bring over my 1972 Cadillac Eldorado to park in his garage, and most likely put an oil stain in that garage. Paul, I'll have to clean that up.
Well, it's Mo's car. It's going to be Mo's house.
Oh yeah, it's going to be Mo's house moving forward.
And by the way, I don't go to the gym with Mo. Mo goes to the gym with me.
There is no A. Bitler. There is no more $100 tier. Is that correct, Paul?
Correct. It's gonna be $250 now.
Just like that. And okay. I think we should take a poll. Wait a minute, Gary.
Oh yeah, fantasy football. Goldie Hale. www.dynastyowner.com. Please mark it. It's a dynasty league where you own your team, manage cash flow. Just please do that. It's awesome. It's great. I don't know if you can sign up right now because it's opening up in the season, but we'll see. But please watch out for it.
Gary's bringing up the idea that if we get an 80% poll voting yes, would Paul grow a mullet? I think maybe.
No, I would not. And Mason, the R8 is not a 2009. Don't be a liar. He talks crap because I buy every car used. My R8 is a 2017. I am not ashamed. I buy every car used. Every single car I own is a used car because I do not believe in paying $120,000 for something that if I just wait a year or two, I can buy for $60,000. It doesn't make any sense. We had somebody, a mutual friend of ours, call us animals, and yet we both make many times more than that guy does, and he has to buy the brand new $150,000 car. We wait till he's already used it for a few years and sold it back to the dealership. We buy it for a lot less. I'm a value buyer in cars as well.
Yep. I will not be buying any more new cars unless it's just something brand new that I really want, but used cars are the way to go. And yes, we are animals for buying used cars.
Yes, I have no problem being that way. Only time I ever bought new was when I got a really good deal on a lease. And other than that, I don't remember the last time I bought a new car.
Nuke It Now says Biogen full year tomorrow. Any predictions on Biogen?
I have no prediction on Biogen. I'm just going to wait to see what they report because I still like Biogen overall. I mean, the only things to look at is how their pipeline's looking, and it looks pretty good, but I think they're losing some revenue here.
My son, Gio, bought 10 shares of Biogen yesterday because he finally sold off his Tesla with great gains, so he's very excited. Can we get Seth lifting Paul up every year like a groundhog? Yes.
What was the question?
Can we get Seth lifting Paul up every year like Punxsutawney Phil to tell us if we make money or not this year? Fishy Face, I love you.
And Fishy Face had another question that was good. What was it above?
Go ahead.
Well, don't pull on my screen because it's going to show the whole...
Okay, then stay on me. Oh boy, here I am.
Where's Fishy Face's question? It was a good one, though.
Okay, keep going. I would say, guys, we will be obviously...
Oh, yeah, the Excel sheet.
Go ahead, Paul. What are you saying?
The website, the first round will not have the Excel sheet on it. The other version in the future, the Excel sheet will appear, and you'll be able to edit how you want your numbers to come out, and it'll screen for those things over time. That's a very complicated procedure, but that will be part of the app. Don't you worry. Not the app, but the website. And by the way, folks, the website's going to be the main focus. We're going to create an app. But with financial statements, it's hard to show a lot of apps with a lot of numbers, so we're going to figure out how we do that.
We're going to have Mo. Go ahead, chime in there, Mo.
Somebody asked me a great question today in the Mo's Muscles chat, and they were asking me about SPOCs and IPOs. So this is Airbnb. I do not trade SPOCs or IPOs, and the reason is I don't have enough information. This is all the information I have for Airbnb right now. So what am I supposed to do with this? I made the comparison. I kind of look at it at a chart like it's a whole story. And this isn't even one chapter of it. So I don't do IPOs, I don't trade them, and that's the reason. Probably good advice to you guys. If you want to day trade them on a 15-minute chart, go for it.
Okay.
2 o'clock!
It's time. It's time. Billy, we will discuss the 2 Teslas that we're giving to patrons this year. Paul and I will be making hilarious Tesla promo videos in front of 2 Teslas. So yes, 2 of our patrons will be driving brand new Model 3s. That is in the months to come. But right now, we will show. It's all you've been waiting for. I don't have a drum roll, Goldie. I wish I did. But Paul is going to reveal. Paul, I'm at a loss for words. Go ahead and take it away.
Here it is, guys. Now, it's not fully done yet, and there's going to be a lot of things that have to be edited, and it'll look different. But this is the Everything Money main metrics. We're going to add a lot more metrics to the screen. We have the income statement, boom, all the way through. Balance sheet, boom, all the way through. Cash flow statement, boom, all the way through. 8 pillars. It'll show you all the 8 pillars, and when you scroll over them, it'll tell you where those metrics currently are. Again, I'm excited about this because this is the first stab we made at it. We haven't even beta tested this thing yet. We haven't done anything. We haven't made all the modifications, but this is the start of a very, very wonderful website. I'm excited about it. I love it. I'm going to be using this almost exclusively, pretty much exclusively. I plan to make this as close as possible to Y charts, but we're going to be adding more and more software over time to it. And I actually want to show you guys. Go ahead. What were you going to say?
Well, I would say, folks, as we get this question over and over on almost every video, is where do I get this information? How do I get a hold of these financials? Whether it's Y charts you have to pay a ton of money for, whether it's Yahoo Finance, I love Yahoo Finance. But now the Everything Money website will give you everything we're doing, all the ticker symbols, all the financials you need in one place. And if you're a patron, this is included. If Paul goes off the chain, he'll start saying how ridiculously silly it is not being a patron to have this much amount of data come into your feed on a daily basis. It will analyze the 8 pillars instantly. And so now you can become all of your friends' best financial advisor by looking at our app in the near future. It's coming out in April. Patrons, you darn well know you will be beta testing this in the very, very coming months. And so it's just incredible. Paul, keep going, baby. What do you got there?
This is everything you're going to get with your Patreon. 8 pillar, everythingmoney.com website, 8 pillars, stock analyzer, financials of the top 3,500 companies, real estate calculator, house flip calculator, momentum notices. It'll tell you when certain stocks cross over certain metrics whenever you decide for it. 8 pillars of a portfolio. So if you have a portfolio of 20 stocks, you want to see overall how do they look combined, it'll do that for you. Stock screener, retirement calculator, Discord, Mo and Paul portfolio access, monthly private Patreon live stream, access to our best value investing back test going back 20 years and what stocks to own, 5 to 15% off of Everything Money merchandise, all the merch we get, depending on what level you are, it's 5 to 15%. The biggest one of all, guys, 10, 15, or 20% off of all Crossroads products. A touch of design, house in Mexico, light fixtures, vanities, everything, depending on your level, you get 10 to 20%, 10, 15, or 20% off, and behind the scenes access to all of our lives.
I would say in comparison, if you're on Patreon, there are literally other channels where the only thing you get is a Discord chat and a coffee mug. We are giving you exceptional value for this. These two gentlemen on either side of me making $1 zillion a year will be talking to you on a daily basis on the upper levels, and we will be doing Patreon-only live streams like we are this Friday night. And so you're getting all of this for a very small amount of money. And if you look in the chats to your right on your YouTube or on your phone, you will see all the patrons championing their experience they're having with us. It's incredible, and there'll be more to come. I'm about ready to curse because I start losing my mind. But we are giving away Teslas this year, and in the future, Uncle Paul will be giving away Rolexes off his wrist, and
yeah, that's true.
And most likely, is it Ferraris or what are you dying to give away?
Whatever I choose to give away, I'll give away. It could be at some point something else.
I made this comparison before. Like Mr. Beast is one of the most famous YouTubers out there, and at 1 million subscribers, he gave away 10 grand. When we hit 50,000 subscribers, Uncle Paul is swiping his credit card for a new Tesla for one of our patrons. So yes, that's completely absurd, and this is all for you guys. We do it for you. The patrons take up most of our daily bandwidth, Paul. You, I, and Mo.
Literally, we talk about the patrons all day long. Somebody just said, does anybody care about their patrons? No, they don't. I'm literally building this whole thing around the patrons. But let's get back to stocks.
Shall we?
Target.
Let's do this. Paul, sorry, my heart rate is quite high now because it's just so exciting. So let's get after Target, the beautiful Target. Moms all over the place love Target. I do too. Let's get after it, Paul. What is the market cap of this amazing company?
$94 billion. So quite high in terms of like total dollars. I didn't think it was gonna be that big, but 94 billion. PE of 25. So that's an X. Profit margin in the last 12 months is probably around 4.5%. So it's an X there too. Again, I expected a low profit margin. Retail tends to have lower profit margins, especially ones like Target, Walmart, those ones tend to have low profit margins. Now, dividend yield, 1.5%. So they basically pay 1.5 billion a year in dividends. So again, we have to look at the free cash flow to see if they can support that dividend. So far, 2 X's, but let's move on to the third one.
Our viewers are correct. I do need to take a short breath because it's just so exciting, Paul. As the journey that you and I have been on, and that Don, oh dear God, Don just switching cameras with his left hand and answering questions in his right, putting up all the videos. It's a little overwhelming to see where we've taken this for a channel that had less than 1,000 subscribers last September. Months ago. Yes, we've been talking about how much this is changing our lives, and you guys are incredible. We hope it's changing yours as well.
It will.
So yes, I do need to breathe. Revenue growth is pillar number 3, of course, Paul.
74 billion to 77 billion, that's a check mark. I'm wondering why there was a big drop here. That's kind of weird for a Target to have a drop like that. But either way, it's still a check mark.
Pillar number 4 is profit growth.
Profit growth, 3.6, 3.3. That's an X. Sorry, 3.36 to 3.3. So it's still an X here, guys. That's interesting.
Pillar
I'm
number
surprised
5.
by that.
Yeah. Pillar number 5 is shares outstanding. We want this going down.
This is a big drop. I love this. 628 million down to 510. So that's almost a 20% drop in shares. That's pretty awesome. So the equivalent is from 10 shares down to 8. That's pretty awesome, guys.
Why are you weary of revenue growth by acquisitions? Alejo asks.
Great question, because usually acquisitions, you want to see a fundamentally strong business. A fundamentally strong business doesn't need to grow through acquisitions. I'm not opposed to acquisition growth. What I'm opposed to is it's easy for companies that are publicly traded to issue more debt and take free cash flow. Instead of paying it out to their investors or decreasing shares, they make bad acquisitions. Historically, publicly traded companies do not make good acquisitions. I don't like that as a way of generating wealth. I also want to see that fundamentally the business itself is strong, and they stopped acquiring and stopped doing that stuff, they can still grow and get a good return for investors, because that's what's going to work over the long run. That's going to make companies last for 20, 30, 40, 50 years.
Pillar number 6 is current assets greater than current liabilities.
Current assets, 20.3 billion. Current liabilities, 19.36. So barely a check, but it is a check nonetheless.
3 X's and 3 checks. We're moving to free cash flow growth. This is cash from operations minus capital expenditures.
And remember, 1.5 billion was it in?
Yep, 1.5 was their dividend.
Okay, so 5 years ago they had 4.5 billion, and last year they had 4.1 billion. X. 3.9, 4.4, 2.4. This is all over the board.
2.4. Okay.
Yeah.
The average free cash flow is 3.86 billion.
3.9 billion times, I'm gonna go with 15 here. I don't like the free cash flow number I'm seeing. Yeah, but I do like the shares outstanding going down.
David is right. My Discord alerts are going off in the background. Someone on the Patreon tell me how to turn these alerts chimes off. But yes, Discord is hopping right now. Keep going, Paul.
So we're looking at roughly a $60 billion market cap from off the dribble, just me going off the cuff.
This is the market cap you want to pay for this
Correct.
company.
They're currently at about 25 times.
Yeah, 94
so
billion.
So it's an X there too. Maybe 24 times. So I do want to see a drop, which is consistent with their profit and loss, their PE ratio. They have enough money to pay their dividend by enough. Let's see here. Mo, why don't you take it over while I come up with some more ideas here?
Let's head over to Mo here for momentum.
So Target is interesting. It's definitely in a downtrend right now, and we can see that reflecting from the candlesticks. Now, I'm not a betting guy, but I'm not expecting Target to go much lower than that 168 range. And let me pull this all the way back here. So I was kind of telling you guys that the stock price, the chart kind of tells a story, and that's why I don't trade IPOs and such. When you see this thing go up and pull back, it really doesn't pull back very much, with the exception of March. So When it runs up, pulls back a little bit. Runs up, pulls back a little bit. So I'm not expecting this to pull back very much. If I'm shorting this thing, I'm really not going heavy on it. Target is more of a company that I'm going to look at for only a long position. And that's just that's my take.
Someone's asking, the Discord is expensive. Is it worth it? In comparison to other Patreons out there, I would say it is expensive, but the value you're getting back, hopefully some of our patrons can address this about the experience we've had. We have 700 patrons as of today, somewhere in that range, and we've only had maybe 20 people leave, and some people get their information and leave.
A lot of people actually upgrade.
Yeah, upgrade. So in general, people are loving it, and the tiers are filling up. Mo, what are your thoughts?
Let me give a comment about the Discord. So it's great that we've created this community. Everybody kind of talks investing all the time. We talk about really everything investing, business and whatnot. One of our $100 level patrons needed advice about selling a car and he wasn't exactly sure how to do it. I said, go into the general chat and throw out your car in there today. Within 2 minutes, he had 3 people answer him about how he should price this car, this and that with the car. So we've kind of created this awesome little community of business and life, and I mean, it's incredible. It really is incredible.
Yeah, as you can see, all you patrons are chiming in now with all your positive thoughts, and we know we love you, and we will spend some time together this Friday at 6 p.m. Eastern during our Patreon-only live stream to answer your exact questions.
But let's look at Target now in terms of what's been going on in the last few quarters. So remember what we did for the other stores? We sat there, Costco, or whatever the one, the Dollar Tree, Dollar General.
Yes.
This is the quarterly operating cash flow from the last 10 quarters. As you can tell, it was right here. So October of 2020 was 1.9. October of 19 was 1.34. That's a huge jump. That's a 50% jump. Look at July, 3.8 versus 2.5. Another 50% jump. Like, these are big jumps lately. Their free cash flow in the last year was $7.5 billion. Their average is 3.9 over the last 5 years. Their trailing 12 months is 7. So they're experiencing a lot of jump from the fact that people there's nothing else to do and they want to save money, and Target's a good place to save money and buy good stuff at a lesser cost. Every mom in the world goes to Target and spends $1 billion when they're in there, correct?
Yes.
Final take on Target, Paul?
I'm still going to wait for a pullback here in terms of pricing because of the fact that I don't think this recent numbers are sustainable. It's currently, so I'm sitting there getting interested in the stock at about 120 to 130, where I'm going to sit there and say, let me build a position. The good news is at that point, the dividend yield will become about 2.25%, which is pretty solid. And I think they're a good, great brand that people love and women love, and that's what matters. If women love it, you're game over.
That was our take on Target. Wow, Paul, you have been flying. I mean, you have been flying now for an hour and 13 minutes.
We still have one more company to do.
Yep.
I think it's a good one to do relative to Target. We want to look at their little brother, I guess, Walmart. When I say little brother, I don't literally mean they're smaller. I mean, Target's like the nicer Walmart.
They say it's the nicer one. Yeah.
Right?
Yeah.
Yeah, I would say so. So let's take a look at Walmart. Obviously, a gazillion stores. I think the drawback in some people's minds is that big Walmart comes into these little towns. They force out small business owners. They also employ a lot of people while also bringing very, very low-cost goods to people at a very small profit margin.
If you get upset that Walmart ruins local businesses, I'm all in favor of local business, all in favor, but I don't believe in it I believe that Walmart employs more and gives more financial benefit to families than paying more at a local business. I'm all in favor of local business, but let's remember there's free markets and all that stuff.
What is the market cap of Walmart? I'm guessing it's like 70 gajillion something.
It's $400 billion.
Wow, okay.
It's a big company. PE ratio is just out of our range, so it's an X there at 20.5. Profit margin, again, just like Target, very low, about 3 or 4%. So that's an X.
We'd like to see this above 10%, but it's okay.
But again, for Walmart, historically, they're around the 4%, 5% range. Dividend here, so we have 2 X's so far. Dividend of 1.5%, which is $6 billion. So they pay in dividends alone $6 billion. So we have to make sure their free cash flow can support that $6 billion. You okay there?
I can't read some of these comments. These people are. I just can't. It wouldn't be fair to the human race to read some of these hilarious comments in the chat. Let's go to revenue growth. Is pillar number 3. Revenue growth over the past 5 years.
Does Target have MILFs galore? Really? Do I need to start hanging out at Target?
Of course you do.
Okay, sounds good.
You can check out You can check out Paul in the T-shirt aisle. Is what I meant to say, as he's buying an 8th grade T-shirt. Go ahead, Paul. At Target, go ahead. Revenue growth.
Walmart, 482 billion, 524 billion. Wow. Check mark. Please figure out how many are from new stores versus internal growth. But that's a pretty sizable growth if you ask me for a company that large.
Profit growth over the past 5 years.
Guys, these guys print money. 14.7, 14.9, barely a check mark, but still a check mark. I want to make note. Look at the previous 4 years, 15.7, 17, 16, 16.4. If you invested right here, this goes to show you how things can change. Look at the next 5 years, 14.7, 13.6, 9.9, 6.7, 14.9. So there can be changes over 5-year periods, guys.
Paul, while you bore us with those numbers, the chats are off the chain that the 9th pillar should be Target's year-to-year turnover with MILF growth in the 20 to 25% range. Maybe you should be hanging out there having your little lunches and get
that
Starbucks
is true.
there. Yeah, MILF.
They have Starbucks in Target.
That's yeah. So pillar number 9 is average MILF range, or DILF if you're looking at me. If you like bearded guys that look like Teen Wolf and Chewbacca combined, I might be available if Beth wises up, my wife, if she wises up. Shares outstanding, Paul, is pillar number 5.
3.2 billion down to 2.85, so it's a check mark there. So they are using that extra cash flow to buy back some shares.
So we have positive growth on revenue, profit, and the shares are going down. Pillar number 6 is current assets over current liabilities.
73.6 billion in current assets. 88.1 in current liabilities. So that's an X there.
Okay.
But I'm not worried about it. Walmart's notorious for having their vendors, really be on the skinny about things. So I'm not as worried about that.
Yes, Kenneth, we are waiting on the wrestling match. We're trying to get into some matches with COVID.
The wrestling match is going to take some time to happen, guys, because of this COVID stuff.
Yeah.
But it'll happen.
Free cash flow growth is pillar number 7. We want the free cash flow increasing year to year, Paul.
16 billion, 15 billion.
Wait a minute now.
It's like 14.5 actually.
It's an X for free cash flow growth.
Yeah. 21 billion, 18 billion, 17.4.
Okay, Paul. I just realized that I'm supposed to be getting an
37.
Average. I got it.
35.4, 14.5, 40.
I got 13.8.
87 divided by 5 is 13 point something. You said 8?
Yeah.
So first off, 13.8 billion. So first off, it's an X in growth. 13.8 billion. They pay a $6 billion dividend every year. They're all good there. Multiplied by, I think this is a 15 all day. Even though this is an established company, the growth potential is going to be very limited. They're going to buy back their shares, which is great. But I still think this is a conglomerate that's so large, 15 times is about right for me. So we're looking at 15 times 12 is 180. So call it $200 billion. It's currently at $400 billion.
So not that it matters too much, but of course David S. Punkins called me out because maybe that number was incorrect with free cash flow, but I don't know if it's terribly off. Paul caught me.
What's 87 divided by 5?
87. Sorry, guys. I let you down. It happens in life. I let you down.
Wait a second. That's not right either. Hang on. Let's just do it from the beginning. Ready?
Please do. I'm so sorry, guys.
16 billion.
Thank you.
21 billion. 18.3 billion. Yeah, how'd you get freaking 13?
I did it wrong, and David caught me. He lets nothing pass.
17.4 billion.
He lets nothing pass his clutches.
And 14.5 billion.
Okay, divided by 5, the average free cash flow is 17.5. Thank you, David. I love you.
Times 15. What's that? Multiply that by 15.
Sure, Paul. The free cash flow multiplied by 15 is 262. Is that 2.6 billion or what is that?
No, 262 billion.
Oh my God.
And it's currently 400 billion. So it needs to fall by 35%, 40%, 35%. And by the way, that sounds about right to me. The company's at 25 times PE. You need to have this thing drop significantly. I don't think you should pay a premium for Walmart. I think it's going to be a slower growth company. They're competing very well against Amazon though. They have a faster growth on online sales than Amazon because they're smaller. You can buy a $100,000 watch on Walmart.com. If you don't believe me, go look it up right now. Go search watches, search from high to low, and there's a Patek Philippe somewhere in there that I saw 3 months ago. It's like $150,000 or something. Actually, let's do it right now on here.
You want to see this?
They're actually starting to, they have grocery stores now, just Walmart grocery stores.
Oh, just purely grocery?
Yeah, purely grocery stores.
Okay, let's go look at watches.
You can buy my company, DGF Spray, Dry Graphite Spray on Walmart as well, or dgfspray.com. Cheap plug there for Paul there.
$96,000. Look at this, guys. This is a $96,000. Oh, yeah, $96,000 Patek Philippe you can buy on Walmart.com.
Does it have free shipping?
It does have free delivery for you. I like that.
Sold.
96,000, 32,000, 27,000. I mean, these things are 21,000, 16,000. Let's just look overall in watches. Forget about Patek. Let's just look at watches.
Can you filter by price?
Yeah, that's what we're gonna do. Price high to low.
I'm sorry, say that again, Don.
I hate their website. The way it lays out, it just looks bad.
Their iPhone app is great though. Have you used it?
Yes.
It's great.
I'm
It
gonna go
really is.
sort by price. I'm gonna go price here, minimum 50,000.
Mo, what's on your wrist right now?
It's a Rolex Submariner.
Okay, I don't know what that is, but it sounds nice.
Oh, look, they have
Thank you.
oh my God, pre-owned. Jesus Christ. Why don't they have the Patek on here? That's weird. Look at this pre-owned Pepsi.
Ooh.
$70,000.
Come on.
Jesus Christ.
Why are we looking at these again, Paul? For
Oh,
our
it's just
viewers?
showing on Walmart.com. You can buy a
can buy
$70,000
any.
you can buy a $100,000 watch. That's the point of it.
Let's get over to Mo with momentum. Mo with momentum on Walmart. Go
All
ahead,
right, so we're definitely in a downtrend right now. And that's a common theme that we're seeing right now. And you would think that with all of this up of the market, a lot of these stocks would be in an uptrend, but they're really not. The thing that I noticed when I really zoomed out here is I was talking about W's and creating higher lows, and this goes for kind of day-to-day trading. But if you look at this chart, as groups of candlesticks, we are creating higher lows as this thing trickles up. So from a trading perspective, Walmart is not a stock that I'm going to typically go short on. There are better companies out there that I can short, but keep a watch on it. If you want to, you could short this thing probably. It might be a little late because I do talk about being inside of the sweet spot, and now you're kind of at the bottom. You're kind of bottom feeding right now, seeing what else you can capture. You want to start that short closer to the 80% and run it down to 32%.
Paul, final take on Walmart.
Just wait. I mean, this is a company that I think should be a staple of everybody's portfolio at the right price, because I don't think they're going away. It's going to be very hard for that to happen. Oh shoot, I'm going to this like.
Got a little inception behind you.
In our town in Mexico, Manzanillo, it doesn't have a Costco. It has a Walmart in there. It has a Sam's Club. We love it. We go to it. They sell scooters in this thing, $3,000 scooters in this Walmart. So either way, it's great. Just wait for the price to fall.
Paul, we would like to finish up with TJMaxx.
Do we have time?
I think we should, right, Don?
I'd say so.
All right, TJX. Everybody loves TJMaxx. They own a lot of different companies besides TJMaxx.
Home goods, baby.
Home goods, 21,000 vendors. Wow, that's impressive. Okay, so TJMaxx. Every chick in the world loves TJMaxx. Ready? Call it $80 billion market cap, PE of 110.
Oh my
I guarantee that's misleading for some reason. There was something that happened. Obviously, you know what happened? COVID. They still made money in the last 12 months, even with COVID. That's what happened. So keep that in mind. It's an X on there, but their profit margin last quarter was 8.5%. I'm going to think this is going to be an X overall for profit margin. 1.6% dividend on 80 billion is 800 million and 400. So 1.3 billion dollars. That was our Dynasty owner thing. 1.3 billion dollars. So we have two X's. PE ratio and profit margin, and we have to count for $1.3 billion in dividends every year.
Pillar number 3 is revenue growth over the past 5 years.
The revenue growth. 31 billion, 42 billion. Check mark there. Again, find out how much of that was same store versus growing stores.
So 2 X's and 1 check for TJMaxx. We want to look at profit growth as pillar number 4.
2.3, 3.3. Check mark there.
Number 5, pillar number 5 is shares outstanding. We want this going down.
Check mark there. 1.35 down to 1.2. And easily a 10% drop. That's pretty awesome.
Current assets over current liabilities is pillar number 6, baby. Keep it
Current
to it.
assets, 16.7 billion. Current liabilities, 11.82. Check mark there. So they have plenty to go off of there.
This is looking pretty good, Paul, for
Yeah,
TJMaxx.
it is.
Free cash flow growth. This is going to be flawed a bit with last year, I assume.
Well, this is not going to have last year's numbers in there.
Okay.
We will look at that, but this is not going to have last year's numbers in there. So 2.1 billion to 2.8 billion.
Chickadee check.
Chickadee check there. Then 2.6, 2, 2.9. Please don't screw this up, Seth.
I got it. Divided by 5 is 2.5 billion.
2.5 billion. Does that sound right? That does sound about right. Times. I hate to show bias here. I almost feel like
Come on, give it to us.
I think it's a 20 times multiple. It's $50 billion. So it's still an X. But I do think TJMaxx has the potential, because the thing I like about TJMaxx is they buy a lot of closeouts. So the online part of that, you're gonna have the competition. They have a reason to drive people to stores. Women always know, you go to TJMaxx when they get their Tuesday deliveries, you go in there, you find what they have, you pick it up, you go. Like it's limited supply. I like that. It's gonna be hard to do online, and every location is different. I think a premium for retail on TJMaxx is worth it, but I still think the stock needs to fall, because what's the market cap?
80.
Yeah, so it needs to fall by 30% or so, 40%. I still like a 20 times multiple for the free cash flow. It's growing. It seems to be growing consistently. And how often do I give retail a premium? Not very often. But I think this is a great company to look at. I want to own the stock at some point, but I think it needs to drop 30 or 40% for that to happen, for me to even start looking at it.
Let's head over to Mr. Momentum, Mo the Trader Mo. Go ahead.
TJMaxx and Home Goods, I'm same brand, but they've said that they are going to start doing some kind of online shopping, which I think is great.
But how?
I don't know. But maybe they're going to do items that they always consistently have will be online.
All right.
I don't know.
Fair enough.
So, TJMaxx, we have a downtrend again, as you can see. If this is something that you want to short, go for it. Now, we had this. I'm going to move over here. This is that gap up that I was talking about. So the stock price jumped from here to here, and it's likely going to fall back down into this area. So if you want to short this thing, go for it. Let me pull back to the year chart. You can kind of see how it just kind of consolidated right in this area all year. If it does do a pullback, I'm not expecting it to go any lower than here. Again, TJMaxx is a great brand. They do need to pull back a little bit, and if that pullback is kind of to that $50. What price did you say it needed to get to?
It needs to drop by 40%. So what's it at right now?
66 bucks.
So call it 20. So call it 35 or 40
Okay.
bucks.
Okay. So it needs to fall a little bit more than this. If we can get a breakout to almost where we were in March during the coronavirus plague stuff, we'll be okay.
All right, that is our take on TJMaxx.
Can I make a comment?
Please do.
Marcel in the chat owns a home near Manzanillo.
You're kidding.
Yeah, he just said so, and then he said he said, have you ever been here? And I'm like, oh man, that's incredible.
Wow.
Paul's luxury homes in Mexico can be found at luxuryzlo.com. And that was our take on TJMaxx. Make sure you guys smash the thumbs up and subscribe if you haven't. And obviously check out our Patreon, which is below if you're new to the channel. Paul, what a day. People were commenting how I could hardly keep it together, which is absolutely true. This is so exciting. We send pictures back and forth and text all day long about this channel and how exciting it is. So the question is, which someone just asked, Paul, where do you see Everything Money going in the future?
This will be built around the Patreon, built around the software. We're going to keep making videos, 1 million subscribers or more. I do think I've seen the places that other companies have ranked as the best finance channel. We will be the best finance channel on YouTube. I already think we are, but at some point we have to get the subscribers for them to give us our attention. But we give actual real fundamental teaching and learning and a wide range of other learning like momentum. We have the best community. Where's it going? To be funny, to the moon. I just look at it going, this is going to be a full-time thing for all of us, hopefully. We don't need it to be, but I want to create shows on the channel. I want to create real estate, do more real estate. When we travel to go look at real estate, there'll be videos brought in. So we'll show our Patreons, to our YouTube, etc. So this is just something I plan on doing. I'm going to start teaching at Case Western Reserve University Law School soon. Finance, I teach at my high school, Walsh Jesuit High School. This is part of the teaching I do. I do that for free. So I do this in order to teach and have a good time, and we'll make money along the way.
Mo, your thoughts?
Yeah, I teach at my high school as well. I didn't even know Paul did that, and I don't think he knew I did that, but we were kind of doing that kind of same thing. The fun part that I'm excited about is we'll eventually get to the point where we're teaching kids. And the reason I started going to my high school was because nobody taught these kids anything. All of this stuff that I learned, I just had a general interest in it, and it worked for me. That's why I learned how to save and start investing and whatnot when I was a young kid. Nobody teaches that anymore. They teach this crap.
They never taught it. They never taught it ever.
Yeah. They teach this crap that you need for a standardized test, and that's not what you need in life. So I'm excited that we're going to be teaching younger kids these things, so hopefully we can make their lives a little bit better.
I have to tell a little story. So my son, my 10-year-old son is in the chat, Gio Kirchanan. His portfolio has lots of these undervalued stocks, including Biogen as of yesterday. He has got $4,200 saved up, Paul. He wants to be a gazillionaire like you. And we sat my mother down, Paul. We sat my mother down and looked at the stocks that her financial advisor. And so for a 73-year-old woman to be sitting at our kitchen table, and I said, we pulled up some company, and I just looked at Gio and I said, Gio, PE of 45. He just goes, psh. My mother had no clue what either of us were talking about. But we are going to get Gio back in here, my 10-year-old. We want to formulate some episodes that are geared toward kids and teens investing, because I think a lot of you share this regard. As I wish someone just told me this many, many years ago. Guys, for like literally since like the last 4 years, I've learned so much along with you and our patrons. I used to only trade stocks based on the price. That was the only thing to ever look like. Will this go up? And then my eyes have been open, my mind's been open to this, the 8-pillar analysis of companies, and it's just been incredible for me, and I hope it has been for our viewers and our patrons. It's just insane. And there's Gio right there on the chat right there. So, all right, guys. Paul, your final trailing 12 thoughts on today's show.
It was awesome. Great. Thanks for coming, guys, and onward and upward.
Mo, thank you so much for your momentum. If you are interested in learning more about momentum and day trading, you can join our Patreon and join Trader Mo as he's chatting with you all day long. Big shout out to Don. Don, say hi. I see you there.
Hello.
Don is sitting back there. He refuses to get on camera. People are asking Don at
Never gonna happen.
At 1 million, we're gonna
100 million.
100 million.
Yeah, you guys want to see me? It ain't gonna happen.
I kind of like Don staying off camera. It's very mysterious.
It is
now.
mysterious, yes, I would say so.
Very mysterious.
All right, guys, thank you. We will see you Thursday at 1 and Friday night, patron only. We'll see you there. I love you. I love you. I love you. See you guys. Thanks so much.